Hi, good morning. Shall we start? Last week we started our discussion, right? So under that, corporate income tax. Taxation of corporate. So before that thing, we have discussed the charging section. Section 2 the Internal Act. Section 2 says the scope of the income tax in Sri Lanka. So it says the person is liable for Sri Lanka income tax. And it says who is person. That interpretation for the person. Person is chargeable for Sri Lanka income tax. Who is person? Individual, entity, body of person, executor, non-government organization, and charitable institution. Charity. Right? Under the entity, it says, what is entity? Company, partnership, trust. This is the definition for the person. The person is liable for Sri Lanka income tax. Thereafter it says on what? Person who has taxable income or who receives final withholding payment. So the period covered, they call year of assessment. For a year of assessment, we work out the tax liability. Now, any person who is received final withholding payment or has taxable income for any year of assessment is chargeable for Sri Lanka income. Right? For a year of assessment, he should have taxable income or received final withholding payment. So they are chargeable for Sri Lanka income. Right? So the definition for the year of assessment is says started from 1st April and ending with 31st March of the immediately succeeding year. So it starts from 1 year, first year, we call 1st April, and ending with the second year, that is 31st March, or there should be 12-month period. It is 12-month period always. Right? Having said that, it says for a company or trust, they can make a request to change the year of assessment, others they can. Right? That is the charging section. So it's covered on what, who is liable, on what, and for what period. Right? So whatever the computation work out for any person, any category person is qualified, whether covered this under the definition person is for a year of assessment. He work out. Right? Just like say we got that example. We can prepare financial statement for even 3 months, even month. But tax always for a year of investment, right? Right. So then, company and company or trust, they can make a request to the Commissioner General to change the year of investment, right? Right. Thereafter, we discuss what is taxable income and what is final withholding payment. Right? Say yes. In case of the taxable income, it says yes. Taxable income it says taxable income for which it could be coming from 4 sources. Say yes, employment, business, investment, other. Right? So it says taxable income is equal to the assessable income provided that there is no deduction under the section 52. So then it says assessable income. Assessable income. Taxable income is equal to the assessable income if there is no deduction under the section 50. So then deduction. Right? So that is it's just like some expenditure we can deduct. Right? We analyze the taxable income from the assessable income. So again says assessable income. So thereafter it says in case of the resident person, assessable income from these sources, wherever the source, right? So we are not bothering about where the source, where the income is generated. Place is immaterial in case of the resident person. It could be in Sri Lanka, it could be in America, it could be in where? Australia, or wherever. Says wherever the source. We are not bothering about where the income is generated. So in case of the resident person. So it talks about now residents and non-residents. How to determine the residency and how to determine the non-residence for tax purpose. This is only for tax purpose. Right? So it says in case of the resident person, residents, non-residents. Now you can see that person can be categorized to two, residents and non-residents. In case of the resident person, wherever the source arises, these sources, only 4 sources we have recognized. It should be employment, business, investment, or other. That order should be followed. Right? Wherever the source arises, in case of the resident person. In case of the non-resident person, says that to the extent that source which is derived or arising from a source in Sri Lanka. That means source should be in Sri Lanka. That income should be generated from Sri Lanka. In case of the non-resident person. Then they are chargeable for Sri Lanka. Right? So clearly understood it. So thereafter it says how to determine the residency. Section 69 special says how to determine the residency. Deals with the residency status. Right? It talks about in case of the individual, in case of the company, in case of the partnership, in case of the trust. Right? They talked about how we determine whether that particular person is resident or non-resident. Right? So In our case, important area is the company. How to determine the residency status of company, right? So it says, as I mentioned previously, in case of the resident person, resident company, wherever the source arrives, we should consider that particular income when we determine the assessable income. Right? When we work out the assessable income, wherever the source arises, in case of the resident company or resident person. Right? So, having said that, it says assessable income from each sources need to be worked out separately. That says how to work out assessable income from employee. That says how to work out assessable income from business. That says how to work out assessable income from industry. What shall be included, what shall not be. Like I said, it's talked about. Right? A simple example, say in case of the employment income, you may have learned that. So whatever thing it is connected to the employment, rendering services, getting rewards. That's called employment. Right? I am rendering services to my company. Or as a reward for that service, whatever I am getting, it should be part of my employment income. You know that in reality, so what you are getting from employment if you are working, so you are getting salary. So the tax law says not only salaries, any benefits, we call benefits. It could be monetary or non-monetary, cash or non-cash. Thereafter it says how to recognize the non-cash benefit. Right? Simple example, say your resident place to your office. Employer providing transfer traveling facility. They are picking you from your resident place and they are taking to the working place. Vice versa. Right? So access that is also part of your employment benefit. It should be recognized. In reality, we don't know that. And then we didn't feel that. Right? But access here, it is also part of your remuneration. But how to determine? Yeah, that's a mechanism to determine. If there is a market value, yes, you have to recognize the market value. If there is no market value, yes, how to work out? Right? You may learn that if the employee is providing vehicle, fuel, driver, and no record is keeping. If the employee keeping the proper record, so as per the usage, how many kilometers on what rate, 25 or 8 rupees or whatever. Right? Apply the rate and recognize the benefit. If the employee is not recognizing the traveling distance or the usage, so thereafter, how do you should recognize the benefit? Right? In really, I mean, in the real world, we can see that we are getting some sort of benefit, right? So, but for the tax purpose, yes, you have to recognize. Providing accommodation, yes. Other benefit is safe. Right? Whatever benefit which is connected to the employment contract. So it should be recognized for tax purpose. So I mean, I know that in some companies they are providing vehicle. That is company owned vehicle. Right? At the retirement, they are giving that vehicle to the particular employee. Right? It is also part of employment income. Value of the vehicle. Right? So I mean, for the tax point of view, so I mean, say you receive vehicle, you have to pay tax on the value. If it is a part of your employment benefit. Right? Even gift connected to the employment. Right? Just like that, it says how to work out the employment income. There it says talks about what is business and how to work out the business income. And what is investment income and what are the things that need to be included. Right? What can be coming under the other source of income. Right? So then each source of income need to be worked out separately. For we to work out assessable income. Assessable income from each sources need to be worked out separately, and thereafter it says taxable income for each person need to be worked out separately. right? Each person need to pay account. Example, say we are doing a partnership, so partners A and B, but for the individual partners, we need to work out their income sources separate. Let's say partnership profit, we are sharing between two partners, so that is business income. And if they have another income, so they have to consider that tax. Right? Right. So it says, so okay, then taxable income from each sources we need to work out separate. Right? So we didn't discuss what is employment income. Right? We'll have a small discussion because the main area is to discuss the income tax liability for a corporation or the company. I assume that you are mastering the computation of taxable income from employees. Right? Right. So in the company business income, you learned that employment income, right? Previously? No. Yeah. Yeah. I get a partner. Right. So business income. Right. The business income says what is business? What is business? We discussed. What is business? So you can refer to the 11 law. What is the 11 Act? Right. This is Consolidated Act. I mean the amendments up to 2023 September is there. Thereafter another amendment is coming in. So business. What is business? Right. So under the 11 Act, section 195. Section 195 give the interpretation for the general interpretation for the whole act. The interpretation given under section 195 is applicable for general. So if there is special interpretation of a separate section, we talk about separate. Right. So then it says employment also is given the what is the employment and business. It says under the section 195 that what is business says trade. Profession, vocation, which has a business character. Nature is business. And if these things are there, it shall be coming as business. Right? Say manufacturing and selling or buying and selling, that is coming as a trade. So profession we discuss, like profession is if somebody having professional qualification, from that qualification he is earning money. So then it is coming as a professional income. If somebody is having special skills, technical skills, experience that choose to earn income, that is coming as a vocation. Right? Right. So if these characteristics, but the important point is there should be business. Intention is business. I could see. The whole intention behind the transaction is earning profit. If it is the case, it is business. Right? So then it needs to be checked. The intention. It is very difficult for you to judge whether it is that business intention was there or not. Right? We discussed some the court decision. Right? Proceedings given by the competent court, whether it is falling under the business or not. That discussion or the decision before they giving the judgment, they have given that elaboration of that case, and thereafter they come for a conclusion that come as a decision, right? When they arrive at conclusion, they have given some points, guidelines, right? Why it is falling under the business income. Just like say somebody is having a speculation of that type of thing. That means they know that future there will be a market. For that market, right now they are piling up some inventories, right? To cater that future market. Intention is earning profit in the future. So that is also coming under business. Why intention is earning profit? Our change in modification to the assets. It deals about the nature of the assets. Whether it is private usage or not. If it is more than their private usage, just like the Rameshwar says, you have some sort of gears for the private usage, other thing not for the private usage. It is beyond your private requirement or consumption requirement. Therefore, there was the intention of earning profit. And financial capacity, that is very good in the point. To hold that asset as a private asset. You can see that in the Mahavitarana case, even in the Rameshwar case, that person didn't have the capacity to purchase that asset. I mean, simple example, say I am earning, say, 100,000 per month. My earning is 100,000 per month. If I am going for a banking facility, they are giving 60% facility maximum. That is, my installment would be maximum installment if I am going for a loan, 60,000. Why? The 40,000 is there to meet up my domestic expenditure. So if I am taking a borrowing more than this, or asset, which is the value is higher than this one. So then there is some sort of hit that I don't have the capacity to hold that asset as a private asset. So then it gives some sort of indication that, so why I purchase that asset, not to hold as a private asset, or to my domestic requirement, I have some sort of intention of resale that asset. Right? So then that business will come. And the modification, the preparatory activity is done to change the form of the asset to attract market. Just like so in the Rameshwar case, we learned that. So it says that he did some sort of changes to the land. He put it to the block and make that entrance road. Everything is the structure change. Why? To resale. Then there is no other purpose. Purpose is to resale. Either such ship builder they did, that's all the same. Right? So then that is important. Right? So I'm going to say in the company, I told you that in setting up a company, all purpose is earning profit. Therefore, the company's point of view, why we are setting up a business entity just like formation of the company to earn profit. So definitely this company business income. Right? The simple example, bank. The bank, what they are doing? Lending and borrowing. So in general scenario, if I put money in the bank and getting interest income, it could become anything as well. Just like investment plan, all those things, right? But in case of the bank, that is their business. If somebody is doing in the individual capacity also, or in the it is also business for tax purpose. Intention is earning money, profit, activity, right? Right. So then business income. So trade, profession, vocation, right? We learn that, right? So under section 6, now recognition of business income. And how to recognize business income. We discussed what the thing that need to be included. So they are on today we need to start. Is there any question? You have what we have discussed up to now? You can ask. Any area to clear? Right. So these things need to be included when we are arriving when we work out the accessible income from business. First thing we say service fee. Whatever service fee we are receiving in connection to the business, it should be especially in the service business or any person who is rendering services, that service income should be part of their business income. So no doubt in when we work out about the financial statement, these things are there. But especially says it. Consideration is in respect of trading stock, right? Gains from the realization of capital assets and liabilities of the business. Realization of depreciation assets of the business. Consideration for accepting or restriction of business capacity. Gift received in respect of the business. Amount derived that are effectively connected to the business. So any other amount, right? But it should be connected to the business. Otherwise, it shall not be. Right? First thing it should be. I mean, within the definition, it should come. Right? What is that? It should be person. To that particular person, that income should be right. Otherwise, he is not liable for tax. Right? Thereafter, it talks about these things need to be included. It says. Shall be included, mandatory. So in the tax law it says shall be, that means mandatory. Right. So but they excluded XM amount and final withdrawing amount. So why we are removing that one? Why final withdrawing amount we are removing? So on the charges section says that somebody is receiving final withdrawing is chargeable for Srilanka. Why we are removing? So it says he can remove that XM amount and final withdrawing. So XM amount, okay, so because it shall not be liable for tax, so therefore it shall not be part of taxable income. So why we are removing that final withdrawing amount? Charges section, I told you that he is liable. Person is liable for Srilanka to liable taxable income. So final withdrawing amount. Only tax. Why we are removing final withdrawing? Very well understand. Right. Right. Anybody else? Is that clear? The first thing is the target section says if somebody is having the person having taxable income or person receives final withholding is chargeable for Srilanka income. Now when we are discussing the business income, it says now foreign withholding thing you remove. What? Separately Dr. Manu. Okay. What? No need to pay tax. Again, no need to pay. That we already paid tax. Okay. right? So the income of say interest income, they are just in 10%, right? Yeah, anyway, that withholding means they have reluctance. Yeah, it's fine. Say minor withholding. Yeah, okay. Not the exempted. I mean, the exempted withholding tax variety also. The say part-time income is a exempt, so there won't be anything on looking at. But it is actually. I don't know. No, that reason is where here we are working out accessible income. Why we are working out accessible income? We need to work out taxable income. So we are not working out here final withholding amount. It needs to be separate to work out. So we work out the taxable income, right? We need to work out the taxable income. So understand this. Person who liable for Sri Lanka income tax means who is having taxable income or final withholding amount. So final withholding amount anyway they are liable for tax. But here intention is our purpose is here what is work out the accessible income and then taxable income. Therefore final withholding amount we need to work out separate. Income kita begin. Out there kind of pala So out there ada. Apa awak tu samaran naik kan? So naik kata mana tadi? Bagi out there naik kata ni apa mana? Naik kata dia apa mana? Jangan nukar. වැඩාලා ආහාර අනුභවයේ මැනවි. අපි කරන්නේ ආහාර අනුභව කරනවා නැකතන ඊට පස්සේ අයිති කරන්නේ. ඒක හැමදාම කන්නේ තමයි කරන්නේ. Right. So no, that's why we remove the final withholding amount. Not because it is exempt. It is liable for tax. Whatever tax, we don't know either 2% or 1% or whatever tax we are paying. Right? But here we work out accessible income. Why we need to work out taxable income? That is the reason. So exempt amount, yeah. Anyway, if there is any income which is exempt, so it cannot come under the accessible income. Why? Whatever income coming under the accessible income is close to the taxable income. Only expenditure we can deduct. Two expenditure we discuss. Right? What is that? Qualifying payment and relief. That is part of some sort of expenditure and the relief. Not take. So the section 52, there is also we to remove any income. Right? So if we work out any part of accessible income, goes to the taxable income. So therefore, if there any exempt amount, anyway, when we work out accessible income, from there we have to remove. We are taking out. It is not part of accessible income. And finally, sitting also not part of accessible income. Why? It shall not be coming under the taxable income. It should be separately worked out. Right? Amounts included in calculating person employment income. So employment income is shall not be included in the business income. It should be worked out separate. Right? I told you. So whatever income first we received, we have to check whether it has that employment characteristic of employment income. So if the case, we need to work out under the employment income. If not, then we check whether it is coming under the business income. If not, whether it is coming under the investment income. That's the core nominal principle. So therefore, employment income we have to remove here. We are not considering it. So that's what I give some sort of example. Corporation and occasional also is similar to employment income, right? They are rendering their service. What is this label? Service. Employment income also we render our service to our employer and we are getting income, but it's coming under the employment income, right? Right. So trade, we discussed this thing, and so this when we work out for the working purpose, we work out in this way, but there is no this type of chart given by the tax law. It is for our ECD department, we are using this type of thing. We start from the accounting profit before tax, thereafter we do the adjustment. If there is that thing that need to be included, we have to add to the accounting profit. If there is anything we need to take a note, we have to remove from the accounting profit. Right? Right. So this allowable and allowable expenditure. Other than it. Now the income side they talk. What are the things that need to be included? Income side okay. So whatever thing in the financial statement when we work out the accounting profit, that is there. Service fee, disposal asset, right? The realization of capital assets, whatever thing that is also there. Right? So what the thing that can be deducted? Say section 10 says general deduction. Says general deduction. Right? Now income side is, you know, profit before tax. It has two parts, right? Profit before tax means one side income, right? Other side expenditure. Now this part covered, right? Things that need to be considered. So now expenditure side. It says section 10. Section 10 says general deduction. Right? But even though that subtitle says that deduction, whatever expenditure recognized under section 10 is not permitted to be done. Not permitted to be done. Right? Even though it is for the required to run the business, but as per the section 10, whatever expenditure coming under the section 10 or the specified under section 10, we cannot deduct. It's not permitted to deduct. So we call it allowable expenditure. Right? So it started general deduction, but it's not. It says, having said that, no deduction is allowed. We cannot deduct anything, which is coming under section 10. It says this type of expenditure. A, B, C, D, likewise they are given. Right? But it says disallowable expenditure. Whatever expenditure recognized under section 10 is not deducted. Right? Section 11 says all expenses to the extent they are incurred during the year. That means first thing is says they should incur during the year. For the year. In the production of income from the business is allowed. Section 11 it says we call main deduction. It says expenditure incurred during the year for the production of income is deducted. That's all. Expenditure incurred during the year for the production of income is deducted. Okay, good. We can do that. Right? So this section is very tricky section in this law says, so we have to decide whether that particular expenditure is incurred first thing. Incurred means we have already made that expenditure. Right? You know that in the financial statement, there are some expenditure called accrued expenditure. Why we accrue in that one? They have accrued. Accrued are all. Huh? Accrued are they have expenditure accrued. Namanya panti dan nabi kong sekarang aja. Aku boleh kau pengen ajuan itu tidak? Ayo aku kan? Silakan dia. Ayo aku sekarang. Baik. Pandang dah mengurang ini baik kau pengen. Ayo aku. Future probability है एक है मैं करूँगा इधर देखिए क्या बोल बोल तो मैं यहाँ चले वाला why we react to that ये नजर है ना that extension has अभी they are paying anyway collection they are made something on right recording paper की ना तो इसमें concept is come yeah matching concept very good we have to match the revenue with that particular expenditure right probability and there is a certainty there should be a legal obligation to pay that if we can recognize correctly that amount like I mean the accuracy is high provision and accrual के difference है provision करना नहीं accrued expenses तो करना provision करना bad debt is provision करना then the probability is there in the bad debt provision when the provision nothing happen but we have to do as what is that concept the first thing is matching other one prudent concept ඒක නම් business කරනකොට මොඩි කාලේ නම් ගන්න prudent concept එක. account ඉගෙන ගත්තා. ඒක account වල business කරන්නේ නේද? කාගෙට business එකේ වැඩ කරනවා. ඒ අතම ඔක්කොම mention දෙනවා. Okay we have made the provision we should bring the business but he will do. ඒක කරන්නේ මේ මන්ට I want to buy this building. How you buy? How we are buying? Okay you take borrowing from the bank and do that. We don't. Yeah, given the concept. Why? The prudent concept is there always in our mind. Where do not give a right. Plus, we analyze the risk factor and everything we include that this phase, business phase, everything we include and we work out the project, the discount factor also we evaluate the project. And then we are doing okay, this project is feasible, NPV is plus, so whatever thing, payback is 3 years, whatever thing, why don't you go and invest? Yeah, don't go. So prudent concept is, you know, okay, make a provision in the worst case scenario, right? You should have some sort of recovery there. Therefore, make a provision. But accrued expenses means that obligation is there. I have to pay that because I have already enjoyed that benefit. Electricity we have already used, but we have not yet paid. Therefore, we are going with accrued. Right? So that's what this says incurred. as you mentioned that it is already incurred. Now that we have used that benefit to generate our income. So that's what says incurred for the production of income. For the generation of this business income, we have already used that particular expenditure. That two conditions need to be satisfied. We cannot do that. That's why it says in the tricky section. It doesn't say you what the expense you can deduct. No. It is incurred during the year for the production of income. Yes, you can deduct. ඒකයි ඊළඟ එකේ කියන්නේ ඔයා කොහොමද profit එක හදන්න ඕනද recognize කරනවා. It says this is the guideline. You decide that whether this is required to you to generate business income. Right? And having said that, it says section 11 subsection 2 says no deduction is allowed for any expenditures of capital nature. So whatever expenditure you incur for the production of income, but if it is a capital nature expenditure, you cannot deduct. Generally, in the financial statement, capital nature expenditure we are not deducting. We capitalize, we recognize assets, right? But here especially says, reason is that under section 11, even capital nature expenditure we can deduct. But if we are making any expenditure to generate income, whatever expenditure first thing, you can deduct. Having said that, it says, but capital nature expenditure you cannot deduct. Capital nature expenditure, they are given the definition. Capital nature includes an expenditure that secure a benefit capable of lasting longer than 12 months. If it is the case, yes, it is capital nature. But if more than 12 months period, that expenditure is giving that benefit to the or the support to generate income, it is recognized as capital expenditure for tax purpose. So the accounting framework again, definition is there. So this is applicable for tax purpose. Right? In section 11 subsection 1 so say we purchase a building to set up our plant. So it is expenditure incurred in the production of income. Correct? Generate income, we need that plant. Otherwise, we cannot do that manufacturing. So then it can be deducted. But having said that, it says under section 11 subsection 2 says no. If it is a capital nature expenditure, we cannot deduct. Clear? So it says what is that? Include an expenses that accrues a benefit capable of. That means that particular expenditure has a capability of generating income lasting longer than 12 months. If it is the case, it is capital nature. Right? Clear? Right. Section 12 to 19. Special deals. The special section. They are talking about some sort of expenditure, whether it is deductible or not. Clear? Right. Then accountant again one another person. Then method so it's the capital expenditure, they are given the definition. Whether advertising expenditure coming under the capital expenditure or not. Expenditure. Capital or huh? Remuneration. Remuneration. For the accounting framework, that would be a recognition of asset and all those things and assets. If is the case, you can recognize that. But we must be right? But again, the advertisement expense. We do advertisement for marketing or promotion activity. And that means we can see that. Another level. Floor. Back. Then I have the back of one back. So as for this one, yes, it is capitalized. Why? So advertisement expenditure after main year के दाम आता है incur कराता है. So it generate income और भी वही company तीन काम income की generation को वो हम क्या? वह बाहर में लाके लंबा मत मारता है. आपको बनाना हो तो वो दाव को anchor बाटे advertisement. बाहर जाओ पाले निकल जाओ दाव anchor बाटे. काम में की income में generate करो. और काटियाना कमाई कितने पैसे काम में चल रहा है. Right? Yeah. So then a particular expenditure bringing income still. Right? For tax purpose, this is capital income. It could be coming out capital income. After that, the accounting purpose thing is called create an asset create and do. Capital income. Either it could be intangible asset or whatever asset. Right? But this is very dangerous for tax purpose. It could be coming under the capital income. So section 12 to 19 deals about that part also they have addressed. Whether that marketing and promotion expenses that are being is deductible or not. It's there. Right, disallowable expenditure. So section 10, first thing. Section 10. Under section 10 it says general deduction, but specially says these expenditure cannot be deducted when we arrive assessable income from this one. But domestic expenditure. There is domestic expenditure. And generally domestic expenditure means personal expenditure, private expenditure. So in general, in the financial statement, we are not recognized as expenditure, right? In the partnership, so it's not expenditure, but it says it could be domestic expenditure. They are giving the definition also what is domestic expenditure. Tax payable under the 11th Act. So tax expenditure under the Act. That's what I mentioned earlier. We discussed it. That's also part of expenditure. Is it incurred in the production of income? If also production of income, we are incurred in that expenditure. If we pay, we cannot run the business. Required. But it says income tax you cannot be done. That's why we start the computation from the profit before tax. After computation, the profit after tax need to be added. Right? Interest, penalties, and fines. Interest, penalties, and fines payable for breach of any written law. Interest, penalties, and fines. Charges. Written law का breach के लगे हो ना, we cannot do that. Just like say, simple example, I would say, EPF allowed given a thing, so I would say there is a delay in the payment of EPF, they are charging interest for the penalty. In the financial statement, we are charging that. That is part of expenditure. But for tax purpose, it is not a deductible expenditure. Written law का breach करो तो कितना? ये मैं तो interest tax है. Right, our distribution law is short. Here number that again. Can we do? Can. No, it's breach of law. So it is breach of law. So we cannot do that. Right? Okay, loan loan okay, you have to pay that interest on this day and that, all those things. If you are not paying that interest, there will be penal interest. Can we do? ගෙවන්න බෑ. වෙලා. loan එකක් ගත්තා අපි හිතමු loan එකක් ගත්තා so run our business working capital loan එක. Run our business. So but during that particular period we would make that payment. So they have charged additional interest. Generally say 8%, another 1% they are charged. Is it breach of law? Written law? No. It can. Right? Just like we call commercial interest. That is possible. Right? So fine. That understood, right? So if it is connected to the written law, breach of written law, so we cannot deduct that particular expense. Even it is incurred in the production of things. Right? Right. Expenditure or any other deduction incurred in derived XM or final withholding amount. That is also not deducted. Why? XM income generate income expenditure again income. Final income final withholding income generate expenditure again income. Right? Yes, because XM amount and final withholding amount we are working on separate. Here, what is the purpose is to work out taxable income. So I mean the XM income එක work out කරනකොට ඒකෙන් expenditure අඩු කරන්නේ. අඩු කරා ඉතින් වැඩක් වෙන්නේ. For tax final withholding income එක work out කරනකොට එතන expenditure අඩු කරන්න පුළුවන් expenditure අයින් කරගන්න. මෙතන යට කරනවා magic concept එක වගේ. The relevant income එක generate කරන income expenditure ඉතරයි we can deduct here. Right? So it should be incurred in the generating the production of income or generating the income or this income, accessible income. So that's why it says so any expenditure which is connected to the XM amount, XM income or final withholding amount, we cannot deduct here. It can be done under that particular income. Right? Because XM amount we have taken out. Final withholding amount we have taken out. When we recognize the income. Therefore, relevant expenditure for that particular income, we have to remove it. It is not deducted. So, retirement contribution by the employer. If the benefit is taxing on the employer, so contribution to the fund approved by the Commissioner General, such contribution not allowed. So, otherwise it is not deducted. Employer's contribution to the which one? Retirement contribution, just like EPF, EDF, whatever. The two conditions is satisfied. Yes, can, otherwise not. First one is says, fund should be approved by the Commissioner. Right? Otherwise, that particular expenditure should be recognized in the hands of the employee as benefit. If this is the case, here we can. Right? It's a general thing. Generally, a value thing says. You are making a payment expenditure, right? So her side, what is that? මෙයාගේ පැත්තට ඒක expense එක. මෙයාගේ පැත්තට ඒක income එක. ඒක ඔය income එක tax වෙනවා එහෙම නැත්නම් මේ expenditure එක විසලා. That's the general thing. So one side it is income, other side it is expenditure. So him to deduct this expenditure, either it would be liable for his her hand as income. Otherwise, it says especially it should be approved. That is here, meaning here. So retirement contribution by the employee, if the benefit is taxing on the employee or contribution to the fund, that fund should be approved by the employer. So generally that EPF, ETF, that funds are active. Other than that, are there any EPF funds in Sri Lanka? EPF employer contribution. What is the employer contribution? 12%. 12% and 3%. Then deduct. Who? When the employer is making that remuneration, additionally he is making the expenditure. ඒකද කියන්නේ ඒක fund එක approve නැහැ කියලා. අද අනිත් එහෙම නැත්නම් කියනවා that income should be part of employees remuneration or tax purpose. It's the case. Otherwise not deduct. එහෙම නැතු EPF එකයි ETF එකයි නැතු 15 වෙනවා ලංකා. හා? කොහෙද තියෙනවා? private area දෙනවා. Yes, private area දෙනවා. So then just like the bank, they have what is state, they have, if that particular fund is approved by the Commissioner General, yes, they can deduct, otherwise not. Either මෙතන මේක purpose එක. දැන් මේ I mean the tax law එකේ හැමදාම මේක intention එකක් එක්කනේ. So what the intention is there? So I'm the employer සමහර අය ඒක deduct කරලා ගෙවන්න නැතුව ඉන්න පුළුවන්. සමහර අය deduct කරලා internally use කරන්න පුළුවන්. The approved fund means they cannot use that money as for their wishes. There is a way to invest. Right? Under the portfolio management, I think you learn some extent. So there is a direction given by them to govern that particular fund. The EPF again, කියලා හිතන් ඒක අපිට ඕන විදිහට use කරන්න බෑ. EPF එකට ඕන විදිහට use කරන්න බෑ. It should be invested in flexible fund, market, there is a way. ඒ සාලි නැතෙන්න බෑ. So end of the day what will be happen? The employee care එක තමයි නැති වෙන්නේ. යාට benefit එක නැති වෙනවා. ඒක නිසා එක protect කරන්න ඕන නම් this the tax law has given this cover. Says it should be fund should be approved by the Commissioner General. If it's the case, you can deduct, otherwise not. Right? For tax purpose, you cannot deduct that EPF and ETF in your asset for income computation. Right? Dividend of the company. So anyway, dividend is not part of expenditure, but especially say access, dividend also not deducted. Right? So otherwise we can deduct, right? So that's why it's okay. Dividend can not. Dividend. What is dividend? Oh. Shareholders are given. Shareholder company again second then company expenditure can up banking I mean the so a capital to the company can be two way. First one is company capital का भी दब गया ना charge करना. So that's what called equity. Other thing is debt. Debt are equity वाली कितना आपको बोला था fund capital का भी दब गया. So debt finance करना हो so what we are making three ways interest. एक आपके advance finance है वो advance. So ऐसा debt का आप क्यों नहीं interest equity वाले क्यों नहीं dividend right the dividend advance. Not bad. Are you going good, right? Fine, yeah. We have to pay that dividend, right? Okay, that's not correct. Equity holders are given a discount factor. Practice has made a direct customer. We can do that. Tax again, especially you cannot be done. Otherwise, it is a part of expenditure. Expenditure, financial income statement in India, changes on equity. Otherwise, yeah, we can talk. I mean, let's say, what is this preferential charge? Finance software. Preference dividend? What is that? Good. They just liquidate it. Preference dividend? Huh? Finance cost. So difference between also we can recognize the finance cost if we have the feature of the debenture. Samara difference also they are debenture feature. If you want to hybrid capital එකක්. It could be coming under the equity or it could be coming under the debt. We need to read carefully the condition. Accumulated remember the under money but for the tax purpose, no, we cannot deduct that dividend. It says dividend. We cannot deduct. Outlay of expenses for entertainment. Entertainment expenses also we cannot deduct. So that's a definition. What is entertainment? Right? Entertainment expenses are gone. So if there is a wording that called entertainment, anyway we cannot deduct. Again, financial statement when we work out or analyze for the tax point of view, you have to check whether it is coming under really entertainment. Right? I can say, we running our business, accounting cutting, it's coming under the entertainment expense. Company yes, category. So it's coming under the entertainment. So for the tax point of view, it says no, entertainment expenses we cannot do. So we need to carefully read that what is the definition for the entertainment. They are giving that definition also. Right? There are this is you can see that reserve or provision for expenditure. Any provision for expenditure also not deductible. This is provisions or but for what loss not yet incurred but expected to be incurred in a future year of asset. So any part of the transfer to a reserve account or provision, it is not deductible. So after the bad debt provision, advance one depreciation, amortization, provision impairment. No. It's because by right now we do expecting future. It's not allowed. We cannot deduct. Depreciation आपकी क्या दें? Depreciation आपकी क्या करना है? Accounts of depreciation राज करना तो बिना तो qualify करता. यहाँ charge करना. So why charge depreciation? Depreciation charge करना. LCA 16 says that we have to do that depreciation, otherwise violation of the LCA. So therefore the financial statement does not show that to do and pay a bill. So why the reason why we are charging depreciation? And depreciation recognize that? Yeah, because of the usage, there is a value which is increase of the value of the asset. Why? It could be coming because of the usage, variation of time, obsolescence. Again, we do depreciate. Because we use that asset, because use that asset to the generation of income, because of the usage, the value of the asset is going down. In a depreciation, I take a molding and amortization, whatever. But for the tax point of view, says no, you cannot deduct provision, whatever provision. Remember, whatever provision. If it is coming as a provision category, no deduction is allowed. For tax purpose. Right? You can see it is incurred in the production of income. Incurred meaning on the definition and depreciation. As I said, use current, so now we have incurred some. Even for tax purpose, depreciation is not permissible deduction. It is this allowed. Right? So, in case the lottery, any expenses incurred in the lottery, purchase of lottery, betting or gambling, so unless that is a business, we can deduct, otherwise we cannot deduct. Right? Say we are manufacturing company, we purchase lottery. That expenditure we cannot deduct. We are company which is we do some sort of, selling lotteries and doing that type. That they can deduct. Casino club if somebody is running, that they can deduct that expenditure, otherwise not possible. Taxes or other levies specified by the Commission General. Commission General specified as in taxes and levies, you cannot deduct. It says what are the taxes. So section 10 subsection 2 says, this is very important. Where a person is allowed a deduction for a payment for which the person is required to withhold tax. As per the law, tax law, the deduction shall not be allowed until the tax itself has been paid to the Commission General. So under the withhold tax mechanism, it says some expenditure. The withholding means I told you, right? Simple example. The example says somebody is making the payment. At the time of payment, he can withhold the tax. Law says this type of expenditure, when you are making, you have to pay the tax. Right? If the law says that particular expenditure is required, subject to withholding tax, but the person paid to deduct tax, paid to remit to the Commissioner General, that particular expenditure cannot be deducted when arriving the taxable income from this. Example, say when you are making a salary payment, the previous if it was more than 100,000, we are supposed to deduct advance personal income tax, API. More than 100,000. If the employer paid to deduct that tax, API, he cannot deduct employment cost. Right? That's the mean. So this other one. This is latest. Not latest. Last year also this was there. I don't think when you are learning previously it was not there. It says if any payment is more than 500,000, right? Transaction says where a person pays another person a sum of money amounting in aggregate of ₹500,000 or more in a day or in a respect of a single transaction or series of payment connected to the single transaction. If it is otherwise than by way of account pay check or account pay bank draft, by the use of a credit card or debit card or electronic payment system through a bank account, then that particular expenditure is not deducted. Indirectly, what it says. It means right? What does it mean? If any expenditure is more than 500,000, you cannot make it by using cash. That's the purpose. Discouraging the cash transaction. So it should be route through banking system. It should be the account pay check. You have to know payment cash check, but it should be account pay check. Account pay check make a account pay check yes. Account has the I check account pay account pay can move to cost check. That's what cash can account. So I got whole color number. Last one check anyway, it should be deposited to the bank account. That means the recipient should have the bank account. Oh, account pay bank draft. Same thing, right? Bank draft account again. So use of credit card or debit card. It's through bank. Or electronic transfer. Bank account again. So that reason is that more than 60% in Sri Lanka market is what is transaction way using cash. Right? So cash transaction karama when a pick කරන්න බෑ. ඔයාලට නෑ. මෙයා විධාන කරනවා cash වලින් මෙයා විධාන කරනවා cash වලින්. ඔයා record නෑ. Record නෑ කියන්නේ ඒගොල්ලෝ record තියාගත්තට ඒක pick කරගන්න බෑ. Tax එකට pick කරන්න බෑ. Therefore, so whatever transaction more than 500,000 should be through banking system. Right? එතකොට ඒක track එකක් දෙනවා. tracking එකක් දෙනවා. They can track. It says that particular expenditure shall not be considered as an expenditure or they shall not be part of asset. Asset tax is recognized as an expenditure is that clear, right? So I mean to say somebody came to do some sort of consultancy more than 500,000, we pay cash. So that particular expenditure we cannot do. We purchase stock more than 500,000, we pay using cash. It cannot be considered as an inventory. That's the mean. Right? So in the developed countries, these things is there, especially in Singapore, they have single tracking system, invoice tracking system. That's what we have. Right? I mean, in Sri Lanka also right now, I mean the cash transaction are able, but you know that in the Pita market, cash transaction. So it is not captured to the formal system. Right? Purpose is that to transfer informal market. Right. So that is section 10. Right. So then in this case, it is not necessary to use banking system if any payment is any payment by the government of Sri Lanka or any government institution, any payment by a bank or financial institution. Generally in the banking system, they have the expenditure made by the bank, they are using that bank system. So not necessary. That means they can make cash payment also. Such class of personal payment is specified by the Commission. So bank account mean what is government institution mean what single transaction, that definition is there. What is domestic expenditure? This first thing. It says under the not deductible, first one is domestic expenditure. What is domestic expenditure? So it says domestic expenditure, the definition is in maintaining him, including in providing shelter as well as meals. That is part of domestic expenditure. Shelter means accommodation. Right? Providing accommodation facility or providing meals is part of domestic expenditure. So it is not a domestic expenditure, we cannot here. Right? Second thing is refreshment, entertainment, or other leisure activities. That is coming under the domestic expenditure. In the individual commuting from home, traveling expenditure. That is also domestic expenditure as per this one. In acquiring clothing, including shoes for him, other than clothing that is not suitable for wearing outside of the world. And providing clothes and everything also domestic expenditure. Otherwise, that cloth is not suitable to wearing outside. What do you mean? Now the domestic expenditure means to maintain other person with some expenditure incurred, that is domestic. What sort of thing? Providing accommodation, providing meals, providing traveling facilities, leisure activities, entertainment activities, that is also coming under the domestic expenditure, and providing clothes. That is also domestic expenditure. But clothes, if it is not suitable to wear outside the work, it is not domestic. That's the meaning. It cannot be. It simply says if I am providing clothes, it is part of domestic expenditure. But that particular cloth is not suitable to wear outside of the work, it is not domestic expenditure. It is deductible. That's the meaning. So then what type of clothing expenditure? Uniform, yes, correct. Uniform එකක් විතරයි අපිට දෙන්න පුළුවන්. Employee, so just like it says the business එක පැත්තෙන් අපි බලුවාම මේ වගේ වෙන්නේ මොනවටද? So I'm the employer. Employer. He is recruiting employees and he is providing facilities. For the employer side, what is his income source? එයාගේ පැත්තේ තමයි business income එක තියෙන්නේ. Employee ගේ side එකේ employment income. Source එක හැදලා තියෙන්නේ ඒක. So දැන් අපි කතා කරන්නේ මෙයාගේ පැත්ත. So if he is providing what is any expenditure to maintain that particular person. And refreshment, meals, traveling expenditure, clothing expenditure. ये ඔක්කොම domestic expenditure වෙනවා. හැබැයි that particular clothes ගැන විතරක් කියනවා. ඒක outside work use කරන්න බැරි නම් it's not a what is domestic expenditure. Right? අපි හිතමු ආ ડોක්ටර් කෙනෙක් වාහන දෙනවාර මොකද අර තියටර් එක යන්න දෙන්නේ. ඔයා කියන්නේ යනවා වෙඩින් එක. පුලස් නෑ වෙඩින් එක. That means there is no market value for that particular cloth. That's the meaning. He cannot use for any other benefit to get that as a benefit. Right? අපි දැන් මොනවාද අර සයිට් එකේ වර්ක් කරන හැටි තියාගෙන ෂේප් එකේ. So ඒ කාර්යයෙන් එහා වෙන තැන් වලට යන්න පුළුවන් but there is no value for that. Right? වෙඩින් එක යනවා ඔයා පොලිසිය ඉන්න ඔයා පොලිසිය මොකක්ද සූට් එක ගන්න යනවා වෙඩින් එකට. Right? That's official, right? Right. In paying any personal debt, including credit card debt, so of an individual. Individual credit card payment करना ना, or loan payment करना ना, एक domestic expense. In paying any interest incurred with respect to money borrowed by him and used for himself, personal borrowing. It is considered as domestic expenditure. These type of things are domestic expenditure. Now we know what is domestic expenditure. Right? To maintain another person, they are making an expenditure that is called domestic expenditure. It's not an employer. I told you that the employee is running a business. When he work out his business income, if an expenditure is connected to the maintaining another person, it is recognized as what is domestic expenditure. He cannot deduct. So does it mean that salaries also we cannot deduct? අපි salary ගන්න දැන් එකේ maintain කරනවද? No. As per this one, yes, domestic expenditure. But thereafter it says these are not coming under the domestic expenditure. So these things anyway, even it is to maintain another person, it is not part of domestic expenditure. What is that? The payment or benefit is included in calculating the income of that individual. So we are making salary payment to the employee. Employees are it is part of their employment income. So it is not domestic expenditure. As I mentioned that previously means provided by the employer to employee. But the employment income is the mean cost as we have considered. Benefit. If it is the case, it is not domestic expenditure. Traveling facility provided by the employer. It is domestic expenditure. But if the real benefit is better than for the when we arrive the employee income. employment income. So then it is not domestic. Right? Second thing is provides consideration of an equal market value for the payment of benefits. What does it mean? If the recipient is paying back, reimbursing that cost, then it is not domestic. So anyhow, it is not part of expenditure, right? So I am paying his traveling cost. He is paying back me. Then in my hand, there won't be any expenditure. Right? It's just like reimbursement of the expenditure. It is not. And the amount of the expenditure is so small as to make it unreasonable to administratively impractical. The amount is immaterial. Right? Or keeping account is not easy to the person who running the business. Then it is not part of domestic expense. Right? So example for the payment of benefit is included in the calculation income of the individuals. What are the example? We wrote that, right? Traveling facility provided by the employer and relevant benefit is recognized in aligning the employment income. Example. Traveling facility provided by the employer. Traveling facility provided by the employer. Benefit is recognized. Benefit is recognized. In arriving the employment income. In arriving employment income. Example for provides consideration of the equal market value for the payment of benefit. So you can make that employee reimburse the cost incurred by the employee. Cost reimbursed by the employee. Reimbursement of expense. So I will say, example say, I mean the employer is providing me, but salary is adu karana. Salary is adu karana. Ehmada kanna puluwan aduwata cabin එකෙන් හැබැයි salary එකෙන් කපා ගන්න. Reimburse. Right? Providing me is a part of domestic expenditure, but if it is a reimburse, it is not part of cost. Right. So example for the amount of the expenditure is so small. What I would think. Work करना है सम्मान. कंपनी के बात बोलना है ना. कितनी बात बोलनी है? say that. So amount is so small. It is very difficult to maintain the record. Otherwise, it is coming under the replacement. Okay? The replacement has to be now. Take up on it. Take up the other. Other must be other than not take. Other good. Other. Other what do you talk about? Other than what do you do? මම අනික වැඩ කරපු කම්පැනි හිටියා ඒ අතර මනුස්සයා ඒක සීට් එකේ වඩගෙන තියෙනතෝ දෙන්න. කොහොමද දෙන්නේ? මම හිතන්නේ ඒක දාලා පොස්ට් ලියලා දෙන්න අපිට ඒක කප් එකේ ලිප්ටි පාලා. ආයෙ තට්ටු හතරක් තිබ්බා උඩ තට්ටුව තේරෙලා දෙකට එනකොට කටිය වෙනවා මම කෙලින්ම ටැප් එක ගාලා වදිනවා. ඒක කියනවා ඉන්නකොට හොඳ වැඩක් කරනවා ටික දෙකක් අල්ලුවොත් ඒක කොපරේ ඉතුරු ටික දාලා යනවා. ආයෙ ගොඩ නේ. So T, providing T copy that kind of thing. The amount so small, right? But there's a cost. Cost to the employee side. I mean the company side, there's a cost. Staff minutes, stuff on the T and those type of things. But it's very difficult because Samara say, Samara, they go on, how they go on, they go on. So it's very difficult to keep that record. So it's not coming under the domestic expense. Otherwise, it is part of replacement, right? Right. These are the prescribed taxes. Background financial services, right? SSCL on financial services, crop insurance levy, super gain tax, this type of thing. Some of tax right now is not operated, but these are especially says these are the specified tax. This type of tax we cannot deduct when we arrive at the taxable income from this, right? Right. We'll have a short break. You can mark your attendance. Representations are there, so they can manage that. Shall we start? Okay, so then section 11, we'll analyze further. So as for the section 11, it says expenditure incurred during the year. Expenditure to be incurred during the year. And it will be incurred for the production of income. So, in calculating the person income from a business or investment, it says business or investment. Even investment income, if they are expenditure incurred here. Expenses to the extent they are incurred, it should be incurred. That means that particular expenditure already made and incurred during the year. So it should be relevant for the year of action during the year. Right? And persons and in the production of income, it should be relevant to the generation of income. Otherwise, not deductible. That's the meaning. Right? So section 11. So section 11 it says, so if it is incurred during the year, incurred during the year, and it should be related to the production of income. Production of income other than capital expenditure. That can be deducted. So section 11 directly says that capital expenditure is not deductible. This allowed. Section 11 says capital expenditure is disallowed. Another main deduction says this expenditure can be deducted, but it says capital expenditure is not deductible. Right? And also, if it is not incurred, that is also not deductible. And now it's not relevant during the year. That is also not deductible. And if it is not connected to the generation of income, that is also not deductible. Right? So it says, if that particular expenditure incurred during the year for the production of income other than capitalized expenditure, we can deduct. It indirectly says, if it is not incurred or not relevant to the year of commencement and not connected to the production of income, that particular expenditure is disallowed. So that's why I mentioned this is a very tricky section. So section 10 clearly says 1, 2, 3, 4 not deductible. Very clearly said. Right? General deduction section, that section 10 says any of these expenditure not deductible. Domestic expenditure, provision, precisely mentioned. But section 11 is very tricky. It says section 11 subsection 2 says capital expenditure not deductible. It says other than capital expenditure. That means capital expenditure is not deductible. And also, if that particular expenditure is not connected to the generation of income, that is also not deductible. So, give me example for some expenditure we incur, but it is not necessary for the generation of income to be served. Okay? Entertainment expenses are under section 10. It says entertainment. But innovation cost. Why it's not required? Innovation means to in 2A, one thing is innovation coming under the capital expense. Because the innovation is just like say improvement, yeah. Otherwise, repair maintenance. It is required, right? Otherwise, we cannot run the business. What type of repair? Research and development. So, research and development is why it's not required. No, research and development, yeah, separately we can talk, but research and development is more or less it is calculated, right? And sometimes it is not, we cannot directly connect to the how much that research and development expenditure contribute to the generation of income. That has letter. So therefore, access separately that. Any other expenditure? Simple example. Rent. Why? As the way you want to have a shop, we go for rent. Office expenditure. So either to maintain the accounts that is required. Otherwise, we can run a business. We can't. Exchange gain or loss. It is part and parcel of the transaction, right? Yeah, very good. Donation. Donation we do. Is it required to do donation to run a business? No, but if we are working in the financial statement, that's good. Right? That is not required to production of income. So it's indirectly said this, I mean, you can see that in the section 10 there was no such, right? Donation we didn't find. It says what the domestic expenditure, fine, interest, that type of things, breach of law. Right? It's precisely mentioned section 10. What are the disallowed? Under that category, we didn't find any donation, gift, that type of expenditure. But this section says if it is not connected to the what is generation, production of income required to run the business, then that particular expenditure is not deductible. And also say some expenditure we can incur from the say previous expenditure right now. I mean, we have already finalized our account financial statement say previous year. Right now, we need to make some expenditure. So how we can do if it is not, I mean, the restatement of financial statement, we can park in some financial statement. But if it is not relevant to be for the year, we cannot do that. As per this one, this section. So it's especially say for a year of consumption. So what we incur that relevant to generation of that income. If it is for future year, it goes to the capital nature category. If it is past year, not possible to deduct. Why it is not to generate income for this year of customer. So therefore, this section is very tricky section. We have to deal with very carefully. And other thing is business or investment. Either business or investment, expenditure incurred in the production of income is required to generate that income. Yeah, we can deduct. Right. So capital nature expenditures we discussed. So if it is more than that benefit is flowed to the organization more than 12 months, yes, it is coming under the capital nature not deductible. So section 12 to 90. So they especially talks about this. Right? It says certain expenses are especially mentioned as allowable deduction, or sometimes it says disallowed. The indirect meaning also there. In such a situation, the condition specifying such specific deduction provision should be fulfilled, and thereby the general deduction rule under section 11 is not applied. So section 11 is not applicable. So then section 12 to 19 is more powerful section. Right? So if it is, we prioritize this one, this section is the superseded section. It has more power. If any expenditure coming under here, we cannot deduct. Thereafter it talks about this one. But section 12 to 19. They are exception to the section level. It talks about expenditure reversed in section level, but these sections apply. Right? That's how you should understand. So then interest expenses. Section 12 talks about interest expenses. Interest expenses incurred by a person during a year of assessment under a debt obligation is deductible if, that means these conditions need to be satisfied. Otherwise, not possible. Money borrowed under such debt obligation was used during the year. That money borrowed should be used during the year, or was used to acquire an asset. Acquire an asset that is used during the year in the production of income. So borrowed money, borrowing should be used to the business, or that borrowed money should be used to acquire an asset. Purchase, construct, or acquire an asset. Asset should be used during the year. Otherwise, that expenditure is not deductible. What type of expenditure? Income. Right? So indirectly it says so that borrowed money. So I mean that if the company can take a loan, but it is not used for the production of income, so then it is not deductible. Right? So borrowed money used to acquire an asset, but asset is not used during the year. That is also not deductible. Doesn't mean. ඒ වෙනකොට අපි loan එක ගන්න asset එකක් හදන්න ගන්න. හැබැයි asset එක අපි use කරන්නේ අවුරුදු. පුළුවන්. බෑ. පුළුවන්. Say we are going to construct a building, right? We finance through a loan. Building is still going construction. Say 10 floors. So interest is expenditure incurring, but asset is still constructing. Right? Can we recognize that interest expenses for tax purpose? No. As for this one, asset should be used during the production of income. That means it is effectively used to generate income. Otherwise, that interest cost cannot be done. It is disallowed. Directly says it is disallowed. Accounting treatment is what they are given. Explain correct. Accounting treatment is actual disallowed. Accounting treatment. So what is the accounting treatment? The borrowing cost. Because there is the standard one. How is this? I would say that still that construction is going on. So we are paying interest, right? Interest given. Grace period can be given to the repayment of capital, not interest. Interest එක loan එක අතර පස්සේ given වෙනවා, right? given bank එක නා loan එක ඔයා මේ විදිහෙන් අදලා අවුරුද්දක් යනකම් interest loan එක capital එකක් දුන්නා ඒක වගේ ගන්න කියලා. So they are given some period to repay the capital, not the interest. That's their value. So still that once the building is constructed, interest cost එක ගන්න පුළුවන්. Using some construction, but they are getting interest from the construction of. Capitalization. Yeah, we can capitalize. What is the definition for the cost of assets? Cost of assets. So can we recognize as asset for tax purpose? The building against cost of interest rate. Yeah, we can capitalize. Now this transaction we can capitalize. Why? What is the definition for the cost of asset? Reason is that we start what the financial statement prepared as per the general acceptable accounting principles is accepted for tax purpose. Therefore, accounting standard is so we accepted, but special treatment is our maker. Right? This section 10 to 19 is special thing. Otherwise, financial statement prepared as per the accounting reporting framework. SLFRS or the IFRS. Same, we are using same thing. SLFRS. It is acceptable tax purpose asset. That means profit as per the financial statement we accept as it is. But section 10 to 19 says these things you need to add or adjust. That's only. Other things are okay. Right? So if it is capitalized, yeah, you can. So what is the remainder of the cost of asset? Purchase cost plus whatever cost incurred blah 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 minus blah blah. It's a part of cost of assets, right? So it says whatever expenditure incurred to the asset bring to the usable condition can be part of cost minus so anything one thing is related tax is the refundable tax. We can remove. Another thing is we are consider the residual. Right? So that is part of cost of the asset. Right. So that is accepted for tax purposes. Right. So then here it says if the asset is not used during the production of income, whatever expenditure, interest cost, you cannot deduct as an expenditure. If it is part of cost of the asset, yeah, not worry about it. Right. Second thing is in any other case, debt obligation was incurred in the production of income. Right? Debt obligation incurred for the production of income. So it's simply, so you know that I told you that funding can be two part. Cost of equity anyway we cannot deduct. Now cost of debt. So first one is talks about the long-term borrowing. That I says was used borrowed money was used for the business or was used to acquire an asset. Now we are paying interest. asset is used, yeah, we can. Right? Second thing is the obligation is happen because of the running business. So we can do that. So it simply says long-term borrowing of other one short-term. Working capital surplus. Working capital is allowed. Example, working capital borrowing cost. Bank. Bank loan. So bank loan की हुआ मैं general है आगे क्या? Long-term में तो investment क्यों long-term में short-term में हाँ? OD. Overdraft क्या ना business से run करेंगे. So that also deductible. Right? Right. So that is it says, so you can see that it talks about the deductible expenditure and indirectly says some are not deductible. Right? If the debt obligation is not incurred for the business, we cannot deduct. If the debt obligation is incurred to acquire an asset, but asset is not used during the year. अभी मैं out use करें ना, इलांग out में use कर. मैं out interest cost आपका ज़्यादा ना, we cannot deduct for tax purpose. Is that clear? ये clear आता आया ना, एक अनिवार्य exam में test कर. हम clear करा. This adjustment is coming for your exam purpose. That's not how exam में कितने बार आना है don't hear them. Right? So section 12 talks about interest cost. So interest cost is says debt obligation was used for the business. So it was used to acquire an asset. Asset should be used during the year for the production of income. In such case, that particular loan interest we can deduct. This indirectly says if the debt obligation is not allowed to the business, as well as used to acquire an asset, but asset is not used, we cannot deduct. So second thing is the debt obligation incurred when we are running the business. So in such case, we can deduct that interest cost. Right? Right. So the money borrowed was utilized for the production of income or to acquire an asset for the business, and the assets was used during the year in the business. So this section 12, that is for the everybody, any person. Thereafter section 18 is coupled with, that's why I discussed together. Section 12 and 18 is goes together. Section 12 says that the allowable interest cost. Section 18 talks about the deductible amount from the allowable finance cost. How much we can deduct? That is especially applicable for company. Say I am running a sole proprietorship, then first section 12 is applied. If it is deductible under section 12, I can deduct. But if it is a company, section 12 says allowable amount. From that allowable amount, how much we can deduct? That's the limitation. And it says this is applicable to business or investment income for entity other than a financial institution. This is not applicable for financial institution. So then in the case of the financial institution, if it is allowable interest, we can deduct. Deductible amount of finance cost attributable to the financial instrument is to be limited to the following formula. So allowable finance cost attributable to the this thing. So total finance cost, that is allowable amount, divided by total cost of financial instrument, right? Which that interest is incurred, multiplied by 4 times of issued share capital and reserve. That is the amount. Once we work out the amount using this formula, that is the amount what we can deduct for a year of payment. It's a lady with the I forget. Oh, come on, I'm going to do that. In the make of my hand, I was Australian and my Right? So we to go to section 18. First, we have to work out what is the allowable finance cost, interest cost. Right? So then, from the allowable interest cost, in case of the company, it says what is the amount what we can deduct for a year of facility. Right? Clear? Right. It goes in this way. In the financial statement, we have the finance cost. Say we have so much. Thereafter, we have to check if there any disallowable interest cost. What is the disallowable interest cost? If the borrowed money was not used for the business or was used to acquire an asset not used during the year for the production of income, that interest is disallowed. If it is the case, that particular interest is not deductible, disallowable. That application was not used for the business or was used to acquire an asset, but asset is not used during the year for the production of income. If it is the case, that particular interest is right. That is disallowed. Right? So we cannot deduct. Second thing is not incurred or not used for the production of income. If it is the case, this expenditure is not deductible, disallowed, right? Right. So then this amount, after we remove this one, this is allowable finance cost. Allowable finance cost. So in case of the sole proprietorship or the partnership, that interest we can deduct. The finance cost we can deduct. Right? So in case of the company, if they from the allowable finance cost, for a year of how much it is? Right? How much it can? It says divided by total cost of financial instrument. Instrument relevant to this allowable finance cost. For the borrowed money. You can say here borrowed money. X means borrowed money. Multiplied by, it says 4 times of issued share capital plus reserve. That is the amount what we can deduct for a year of month. Right? So it doesn't say this is applicable only for company, but that issued share capital is they are only for company. Therefore, this restriction is applicable only for company. This is only case. So it doesn't say this is disallowable. What is the amount what we can deduct for a year of month? Limitation of the deductible interest cost. So first thing we have to recognize the allowable interest cost. So the allowable interest cost relevant borrowed money, or the if I put it in simple way, balance or the borrowing amount relevant to that allowable finance cost. So multiplied by 4 times of issued share capital and reserve. That is the amount what we can have for a year. Is that clear? Right? Clear? This is the amount what we can deduct. So whatever, so this amount comes to here. Relevant non-capital should be there, and the should share capital and reserve here, and 4 times. And this is unique. Now it is 4 times for everyone. This amount we can deduct for a year of assessment. That is the deductible amount of finance cost. Deductible amount. It does not say disallowable, it is deductible amount. So balance thing can be carried forward next year. Like that, we can carry forward for another 6 years. Right? So for this purpose, reserve means other than revaluation reserve. Revaluation reserve doesn't consider as a reserve for tax purpose for this person. When we work out the deductible amount of finance cost, we have to use that formula. So for that purpose, the reserve means other than revaluation reserve. Right? This is year-end balance. Issued share capital and reserve means year-end balance. Right? Right. That is the maximum what we can deduct. What we can deduct for a year balance. In case of the company. In case of the company. Other tax non limited. So the maximum limitation is applicable only for company. If there is balance amount, that can be carried forward. So any residue amount, that means we cannot deduct any residue of financial cost that could not be deducted in the year can be carried forward to 6 years applying the same formula. We have carried forward to next 6 years and up to this limitation we can deduct. Right? The above formula can be applied where a share capital exists only. That means only for company. Financial instrument is defined in section 198 is to cover any interest payable on the debt obligation, including account payable and obligation arising under deposit, debenture, stocks, treasury bill, whatever. Financial costs also included loss with respect to financial instruments, such as loss incurred in the settlement of debt obligation. Right? That is covered as the financial cost. Okay, not only interest, only interest. Right? Is that clear? So this you have to be familiar with this formula. Exam is formula then. Exam is then other information टी वितरा है, information टी वितरा है. So you have to use that formula and work out what the deductible amount. Right? Other one. Right. So we call this concept is thin capitalization. You know, but we use in generally. This is called thin capitalization. So, code of thin capitalization. Right. So initially in the 2006 Act, this was introduced to the law which is obtained from related company, related party. Now it is extended to the external borrowing asset. Right? Right. So financial income for the period can be deducted based on the formula for the year 24-25. If there is any undeductible amount that can be carried forward, right. If there is no harm in the finance cost incurred during the year, but if there is a brought forward amount, we can use that previous year basis. Okay, is that clear? So now section 12 and 18 together we have discussed. Section 12 talks about the allowable finance cost, allowable interest cost. Section 18 talks about the deductible amount of the finance cost in case of the company. Right? So the section 18 applicable only for company. This is otherwise we cannot work out that limited. Right. So section 30. So it says allowance for trading stock. Right? The deduction for the allowance for trading stock is allowed under the determination and for determining the allowance for trading stock, it needs to follow the general accepted accounting principle. Again, it's referred to the SLFRS. So how we should work out the allowance for trading stock? Opening trading stock, expenses incurred during the year, and closing trading stock. So once we remove that one, it's called allowance for trading stock. Right? Yeah. So it says opening value of the trading stock of a business for a year of assessment shall be the lower of, sorry, closing opening balance is the previous year one. Closing value of the trading stock of the business for the year of assessment shall be the lower of the cost of trading stock of the business at the end of the year or the market value of the trading stock of the business at the end of the year. Right? So that is for allowance for trading stock. So this is very simple. It says allowance for trading stock how sale. ये क्या है तामगोल पाඩම් කරන්නේ right තාම කරන්නේ ලෙක්චර් කරලා ඊට පොත දෙනවා ඊට ක්ලාස් ගහලා අරන් යනවා මේක ඉතලයි එහෙමනේ දානවා ආරි මෙයා උගන්වයි කියලා මම එහෙම උගන්වන්නේ නැහැ ආ පාඩම් කරන්න අවශ්‍ය විතර ගන්න දෙන්නේ ඊළඟ දවසේ ඔයා රෑන්ක් මයින්ඩ් එකකින් එන්න මම කියන කිසිම දෙයක් දෙන්නේ ඊළඟ දවසේ ඒක තේරෙන්නේ නැහැ ඊට පස්සේ එන්නේ නැහැ right? So it's this level. So first thing appointment ගන්නන්නේ. You have to pay. Right? මේ හැමතැනකම මම මේ දැන් බැලුවා ප්‍රශ්න අහයි කියලා අහන්නේ. අහන්න ප්‍රශ්න. ඔය හැමතැනම ප්‍රශ්නයක් ඉතුරු කරලා තමයි යන්නේ. ඔයාලා තේරෙන්නේ විභාගෙට ඔන්න වෙන්නේ. දැන්ම පටන් ගන්න. Right now also start. So that is my study. Right? ඔයා අද මම ගන්නපු දේ තුන් පාරක් කියවන්න ඔයාලට තේරෙන්නේ නැහැ. මම දන්නවා I know that this formula ඕක දැන් දුන්නා හදන්න. මේ දැන් උගන්වලා දැන් දුන්නා හදන්න. I know that. හරිද? first day පළවෙනි එක තමයි සාමාන්‍ය පොදු කරන්න එපා. Right? මම මේ වෙලාව එකයි මම කරා. මම නම් වෙලාව දැන් I told that the previous lecture I have summarized in 15 minutes or 20 minutes. I know that you are looking to anything. Yes, I think I will like some area. Right? Paragraph on RTR. This is not paragraph. Now, so it does. They are not to bring the balance. Right? So, it was a lecture again. Don't waste your time. අනේ එකයි ගැන කතා කරගෙන ඉන්නකොට යා දෙවිලි කතා කරලා ඒ අපරාධ වෙලා මගේ රාත අපරාධ යන්නේ රාත අපරාධ නේ. එයා අමාරුයි කතා කරන්න ඕනේ නැහැ මම අමාරුයි ලෙක්චර් එක කරනවා. යා ලෙක්චර් එක විදිහට ටෝක් කරලා තියෙනවා. Because you are now in not that dialogue. Right. And other thing is, as I mentioned, this is very difficult language. So tax is difficult. ගොඩක් අය වෙයිට් කරන එකනේ. වෙන්නන්න බෑ. ලෙක්චරර් වෙන්න නැත්නම් සබ්ජෙක්ට් වෙන්නන්න බෑ. The arithmetic is very hard. Also learning is very interesting. ඉබරලන්නේ. බලන්න දැන් තමයි මම වේගස් තුනක් කරලා තියෙනවා ටැක්ස් වලට. ඒක කරලා දෙනවා නම් යන්න පුළුවන්. ඒවයි නෑ. I am not telling, I am not promoting taxation. I told you that that's how much they charge, right, for one particular, what is this, consultation? They can charge. Because that is expertise there. Expertise. Right? So you guys are not only the tax, not only tax, learn the subject in that fundamental you can understand, so thereafter you can apply. Is a study here. That is important. Don't do. I mean, the grant and video exam may pass the line. So, you accumulate your knowledge. Right? Araman Kalikone. How to be a kind of look up at the double entry system or other. That how double entry system is somebody. Single entry system having a single entry. Right? So I learned that double entry system in my level properly. Still I am using that. SLA part में इलाका आउट द दागा कावद में नमना RF का double entry system में there is no harm. Please continue. our account charge behind it behind it down it. ये double behind it. That's fine. ये नहीं होता मैं I don't know. So you and that but the Kargil society then girls they don't know the double entry. What is making up the system? The concept is there. Why knowledge is not there? That's all right. Right, financial statement, mom make any guy. Mama, money na financial statement, samana na amutu yo. Mandi jala seven lethi. Mom me see pa niya. You guys started account no. Ya boda mana na boda buy. So, hamela भी आता है सात लोगों ने कहा कबार मार बनता है कि कबार 40% हो हम उसको बना खाने वाला नहीं इसलिए ये मेरा तो ये क्या बन तो ये रहा फाइनेंशियल स्टेटमेंट है बिना cost of sales sales justification cost of sales cost of sales. Whatever perpetual inventory now it's a perpetual inventory. Okay, right, perpetual inventory. So how you are recognizing cost of sales? There is no sales. Split to dividend. See, right? So I mean, even you can require that transaction, you can say that one, right? What is fundamental because right one. So I mean, there is no rocket science. So to apply that knowledge, but you should have that knowledge in perfect. That's what I mean. Agar you develop from that line, I can account it. Tax again, right? Tax again, tax again, account profit. So the accountant role is, I mean, below that, the line. He is not setting up that account system in our right. Once you do that one, it will be that way. Design one. That knowledge is because someone can wisdom. Knowledge is another word. I have to do right? That may be better than tax very good. Eh? That's not what I believe. US tax very good. US tax very good. Lanka export US destination. Right? So then export market so Lanka export SME sector job three wheeler one side job manufacturer so that's impacted. Right, so there must say the ways and means and so user solution, but end of the day it is that. What I want to highlight that is very the money is not way. My one say tax it's also a good subject. And so when I am teaching, there are some sort of gaps. You have to be right. Right. Okay. So the allowance for trading stock. It says opening inventory. During the addition, we add inventory. That is trading stock, right? It says trading stock. From there, we have to read out. This is called allowance for trading stock. Here it says closing inventory means, sorry, opening inventory means previous year, closing inventory. Closing value of the trading stock of the business for the year of commencement shall be lower of. It says lower of. House value? Valuation? Lower of cost? Market value? අපි නා දන්නේ එකක් නැද්ද එතන? Yeah. So what is mean by end of the day allowance for trading stock? මේක වගේ එකක් කියන එකක් නෑ. Cost of sales equal to cost of sales. If it is the general accepted accounting principle, the same thing we are following. So valuation of the inventory we do at cost of NRV, whichever is lower. Right? NRV means net realizable value. That means NRV. Sorry? NRV can realizable value. Net realizable value. Right? Net realizable value can no, sorry. Any loss? Cost minus any loss? NRV can. हाँ उपलब्ध है क्या हुआ? शुद्ध उपलब्ध है क्या? आतिश में क्या शुद्ध उपलब्ध है? किंग वाले इधर हमारे ना अरे बता language is okay. So शुद्ध उपलब्ध है क्या means what is that? If we are selling right now that means what is the amount what we can realize minus cost to sell. Any selling cost that you know we are not pulling. So indirectly what is mean? Other market value. දැන් මම මාකට් එකේ විකුණනවා නම් කීයද මට විකුණන්න පුළුවන්? සුදු ප්‍රත්‍යක්ෂ. හරි එහෙනම් විකුණනකොට මොනවාරි වේදනා තියෙනවා ඒක කරු කරා. ඒක ටික තමයි මට හම්බෙන්නේ ඉන්වෙන්ටරි එක විකුණලා. That's called net realizable value. So indirectly it means that market value. So but tax law directly says it not NRV is the market value. Whatever is low, same accounting principle, right? Right? So opening inventory during the addition means purchaser, closing inventory, difference is allowance for trading stock. Because I select you know what middle is there on that. So it's equal to the cost of sales, more or less. But it says that as per the finance, but the reporting framework that you have recognized. So lower of the cost of market. It doesn't say how to recognize cost. What is inventory recognition again? Because it's referred to the what is accounting standard. Cost again cost of market. Define as per the financial reporting frame. अभी आ रहा है. Cost का recognize करके दिए थे उन्होंने inventory. Right? आने पाए बना. ये अभी दाना आने पा. उन्होंने दिया उधर में right? Cost को recognize करके दिए गया उसको विकुण बड़ा गैर एवरेज इंगना और पुकार से कराने. Cost out में जाने ड्राइव को पाए को. ये ध्यान रखना. Right. If I go hurry, weighted average more suitable. Right. So that is allowance for trading stock, section 13. Now section 14. Section 14, well, before we need to discuss capital allowance, section 16. 14 and 16 have a direct pay relationship. Therefore, I will discuss the section what is this, 16, then 14, then 15. Right? Section 16 says capital allowance and balancing allowance. So, in calculating the personal income from business or year of investment, capital allowances shall be deducted. Now, it says capital allowances you can deduct, and balancing allowance also deducted. What is capital allowance? Capital allowances are granted in respect of depreciable assets. Capital allowances we are granted to depreciable assets. Assets owned and used by a person. Depreciable assets owned and used by a person at the end of the year of investment in the production of income. Now we are giving capital allowance. For what? Depreciable asset which is owned by the person and used for the production of income during the year. For that thing we are giving capital allowance. It's called capital allowance. Right? And calculated in accordance with the cost schedule. There is a schedule, it says how to work out the capital allowance. Capital allowance was granted with respect to the particular year of investment shall be taken in that year and shall not be deferred to the later year. So, how to work out capital allowance? Where a depreciable assets owned by a person is only partly used in the production of income for a business at the end of the year of investment, the cost of the and the consideration received for the asset shall be apportioned according to the market value of that part. That means any asset which is used partly for the business and partly for the other purpose, part we can claim, which is related to the business. Capital allowance shall be calculated according to the straight line method using the following formula. Depreciation basis of the asset at the end of the year of investment divided by number of years. Depreciation basis of the asset means depreciation basis of the asset at the end of the previous year and amounts added to the depreciation basis of the asset during the year of the assessment in respect to the addition of that asset. So, how many years? It says depreciation basis divided by number of years. So, number of years is defined based on the class of the asset. It says class 1 to 6. Right? 1, 2, 3, 4, 5, 6. Categorize the assets. First thing is computer and data handling equipment together with peripherals, buses, just like motor vehicle, road cars, building structures, similar works, intangible assets, excluding goodwill, milking machine, which is latest technology used in the local fresh milk manufacturing. So, number of years. The first class of asset over a period of 5 years. He said like this. That means just like it's give the maximum number of years. Where so it is a little different. I mean similar to the other concept, accounting concept. What is depreciation? Yes, depreciation also very similar, right? There we use cost of the asset minus residual value divided by useful lifetime. Now here it says depreciation basis divided by years. That is fixed by that. It doesn't say that useful life. How to determine useful life? In the accounting term. Building how to get depreciation. How is this like? How is the depreciation? How will you learn now? Machine? Right. Computer? Why depreciation? What company is it? No. Economic choose. I mean, how to determine the number of years, how many years you are depreciating for accounting purpose? Company policy. Yeah. It is the management discretion. Management decides the account the depreciation policy. Policy game can pulang. Pulang. So yeah, therefore there is no, I mean, like as per the accounting term which it says, we have to decide what is the useful lifetime. It's based on the economic usage, technical obsolescence, time expiration. That actually we consider. අපි බිල්ඩින් එකක් හදලා අවුරුදු 20ක් ෂෙයා කරනවා. මොනවාද මෙහි කඩන්න නෙමෙයි කොහෙද මියන්මාර් වගේ කඩන්න බිල්ඩින්. උදේ බලනකොට නෑ. අවුරුදු දෙකක් ඩිප්ලිකේට් කරේ. දැන් ඒක ටික මොකද ආයෙත් ටික ඩිප්ලිකේට් කරනවාද? ඉවරයි. Right? So ඒක නිසා but tax law ඒක නිසා අපේ accounting එකේදී that policy we can change. අපිට ඕන කියන්න පුළුවන් profit එක වැඩි කාලෙදී depreciation එක වැඩි වෙනවා. අඩු කාලෙදී අඩු ගන්න. Because tax law says we are accepting the financial statement prepared as per the accounting reporting framework. Accounting reporting framework specifies that you have to depreciate assets. So how to depreciate? You decide. Okay, tax law කියනවා ඔයාට ඔයා decide කරන්න. It is as per this one. Why? Somebody can manipulate. Profit එක වැඩි කාලෙදී depreciation වැඩි කරනවා. Profit එක අඩු ගන්නවා. No, that is not the case. Here it says, okay, for a computer that type of thing or period of 5 years. Any person. That I mean that based on the industry, right? So the accounting depreciation. So if you are in the IT industry, within 2 years, generally they are depreciated. So technology is fast moving. අනිත් එක වල සැලුන් එක. කම්පියුටර් එක. පස්සෙන් කියන්න පුළුවන් නේ මන්තම්. Right? Right. So that's that. So it says the number of years is specified. That is for the any person. Another thing also 5 years. Only building it says building structure and similar work in a permanent nature. I know here. Building එකක meaning එක මොකක්ද? Building. What do you mean that building? Oh. Building එක definition එක. අර building. So building, බලන්න Google මේ කළ building එකක් කියන්නේ මොකක්ද? ඔය බලන්න බලලා නැහැ වෙන එකක් බලන්න මොකක්ද? Building එකේ definition. What do you mean by building? Oxford dictionary ගන්න තියෙනවා definition. I mean we are dealing with the law. Definition is important. Shall I read? So it says, living on Oxford language, a structure with a roof and wall such as a house or factory. That's all. It's order. Roof and thin on building. So what does language? Open area. That other thing is what is that? Wall. This is nothing. We don't know. There are many, right? We don't know. The showroom to the land is there. Open to. You can structure without. Another thing. Vahana service करना से start करना. No wall. Wall is right. Count door wall. Petrol system. Building and all. So that's the problem. That's why it says what the structures. So if you are going the lexicon, I mean the legal definition for the building, it says you have to use cement, metal, bricks, that type of things to complete you. It's not a problem, then building another withdraw links. Columns with right? And other thing is metal level. Service station structure petrol so that's what says building structure. But it should be permanent. Otherwise, depreciation tax law that's what I mentioned. So red law, this one. Cars, this thing, equipment, aircraft, you can see that. Specialized public utility plant, equipment and machinery, office furniture, fixtures and equipment, any depreciable asset not referred here. So you can indicate, both buses, minibuses, goods vehicle. Construction and earth-moving equipment. Earth-moving equipment. Okay. No, this comes in the lorry or trucks. That kind. Earth-moving equipment. So motor vehicle. Tax law money can have answer. Vehicle motor vehicle. What is mean by motor vehicle? So when you are writing any, say that's but the opinion you have to be mindful of those things. What is mean by motor vehicle? The Oxford dictionary is not tax law minimal dictionary a road vehicle powered by an internal combustion engine or other motor. Engine motor active. So motor engine motor right? So can you see the electric vehicle motor active? Solar power can use the motor. Right? That's called earth-moving engine. And just like construction industry, but the excavator, take a motor you can see. And that's what they capture. So any depreciable assets not captured there. That's also. So then other thing is intangible assets excluding goodwill. Intangible assets also they are recognized, but excluding goodwill. Why goodwill? Not there. Goodwill also intangible asset, right? So that is also internally we are building up. There is no rule to quantify that asset. So that's why say somebody can manipulate. So our goodwill is so much. Right? It is also management issue. So that's why they are removing that one. So it says, so if there is no useful lifetime, so orbit of 20 years, otherwise we will the useful lifetime. So intangible asset example like that. Trademark, software, good. Software का copy को lifetime के दिए नहीं Samara license version. So number of years things. So given that way. Let's say 5 years period. Software use right. So this is 6 one is especially for the milking industry. It says local manufacturing milk industry. Right. So now you can see that. So depreciation basis divided by number of years. That number of years except that building and intangible asset other 5 years. Building 20 years. Intangible asset if they are giving that period is not or we don't Clear? So in that way, we have to work out the what is capital allowance equal capital allowance. Right? Clear? Right. So then asset should be owned by the person and used in the production of income. Then that particular asset is entitled for capital allowance. So in the depreciation we work out cost, but here it says depreciation base. For the tax purpose it says depreciation base of the cost. We don't know what is the depreciation basis, but anyway, the capital allowances we are working on depreciation base. Right? Right. So no capital allowances shall be granted to a person in respect of road vehicle. Other than this, so capital allowances not granted to road vehicle. Road vehicle other than these things. So that means these vehicles are entitled for capital allowance. What is commercial vehicle, a bus or minibus, a goods vehicle, a heavy general purpose or specialized truck or trailer or a motorcycle. So that is entitled for capital allowance. So others not. So what is commercial vehicle? Commercial vehicle means a road vehicle designed to carry loads more than half a ton, so more than 13 passengers, or a vehicle used in transportation or vehicle rental business. So other than that, other vehicle is not that capital allowance. It's indirect with what is goods vehicle and those things, that is we can say capital allowance. So commercial vehicle, they have given the definition. Commercial vehicle means vehicle which is designed to carry more than half a ton and 13 passengers. So then that is coming under the commercial vehicle. A bus or minibus, that's that. A goods vehicle. Goods vehicle again. Goods can condition नहीं होता नहीं no. Goods sector क्या? सिंगल वाले क्या कब राजा है So I mean the goods transport purpose vehicle. Right? Heavy general purpose or specialized truck. So that just like prime movers and all those things. Containers, that type, and trailer also got a motorcycle. So that things are there, right? Other than that, it's a vehicle. A vehicle or another vehicle. Yeah, especially say. So I mean that this purpose of this the section 16 to give some sort of deduction to asset which is used in the production of income. So, but this eliminate other vehicle, even it is used in the business. Just like it simply says vehicle used for traveling purpose. Vehicle used for traveling purpose is not entitled for capital account. Traveling purpose. Other vehicle is van. So we have to check whether it's used for the transport of goods. Yes. 3-wheeler का क्या? Right? So motorcycle है special किया दिया. ये हमने तो motorcycle है देना. वो motorcycle है बाहर गया था use करना पड़ा ऐसे ना पुलो. Traveling होने use करना पुलो. But especially there motorcycle here. Bus or minibus here. That's possible. Right? Commercial, it was kind of commercial vehicle like a definition actually. Make a commercial vehicle. So half a ton, so more than 13 passengers, and thereafter it says vehicle used in a transportation of vehicle rental business. Because then coming to a motor car, jeep, in the back. But if it is a rental purpose, they can. Just like say what type of business? Vehicle hiring company. Or kangaroo caps. Capsule. They go along in car. Tourists are in here. Are you the name? Muscle ministry coming in. What thing? So, hotel industry they have the luxury vehicle. So, indirectly, I mean, if it's a capital asset, it's not given for the luxury vehicle. Right? But that exception that if that particular vehicle used to transportation or vehicle rental business, they can claim. Otherwise, not. So, is there a difference between transport and travel? Yes. So only transportation purpose here we can use. That is entirely for capital accounts. Right? That just like they can look at for the pick me up, and generally pick me, they don't have their own vehicle. If they have, yes, Uber Gap, if they have the vehicle here. Right? Just like they are hiring or the renting their assets, they can claim capital loss, otherwise not. So just like the tourism industry, they have that vehicle. Hotels, just like the Jetpin and that the Galle or whatever, they have their own car. You can see that. So they are using to not traveling purpose, but it's for transportation purpose. Transportation of their passengers. And they can claim. Otherwise, not possible. And it simply says, if any vehicle which is used for traveling purpose, they cannot claim capital loss on that. Right. Any question? No. Una. Make a gear the very Sorry? Transfer purpose use. Letting purpose use. Yeah, just like you know that I mean, make it look like a vehicle hire wedding couple. Right, you move and use the luxury vehicle. Use the company. Yeah, I rent it. They can take. Right? Right. Now they are good on that. If they are not there, they are not active. Are Masawa? The last one is the best same day. Make a car. Goods vehicle. Renting hiring is traveling purpose of them. Manager is to travel. So then they can they claim capital. Profitable. Right? I mean, embark करना है नहीं बोलो धन्यवाद रोकना होगा कि कैरी करूँगा इतना प्राप्त होगा आपसे क्या ना एक बार मान लीजिए embark करना था और वो अटक गया होता है थोड़ा तकलीफ है पुरुष नाला आएगी तो मौके पर नहीं अब अगर दाल दाल में ना दाल बात है मैं बड़ा बात है मिलता है क्या ना तो ना है सारी माना बोल गैनवाइज सारे तो मैं कितनी के साथ है सारी बात करना हाँ मैं ऐसे काम दाल दाती मेरी लागू है सुना pada benar tanpa kalau ini dari kata oh nanti aku nanti wah ini sekali ini saya ngomong itu tidak itu ada tuh Oh, gila banget So they can say because it says in the act also says any other depreciable asset. It is depreciable asset but used for the production of income. Yeah, they can claim capital. So by different industries, you can see in the what is this asset class of assets and how they can use for the production of income. The important point here is the assets should be used in the production of income. Otherwise, they are not entitled. Right? And also, it is based on the industry. Based on the industry, you can see different industry. Right? Then අපි බලමු බස් එකක් තියෙන කෙනෙක්. The proprietor කෙනෙක් කියනවා බස් එකක්. So what is the business income? The income category is business income. Can we claim capital loss? Yes. Buses are there. Right? Say salon එකක් කරන කෙනෙක්. What is the thing? Salon එකක් කරන කෙනෙක්. මොනවද ඒ black? තියෙනවා hydrogen structures ටික තියෙනවා. කැටි මන්නයි වගේ. Can they claim capital loss? They are within here. So we can see that. Right? Asset category. So good example එක මම කරන කලින් ඇක්ටිවිටි ඇතුලේ ඉන්න මේ ඇක්ටිවිටි තියෙනවා. So Lanka is currently with my client කෙනෙක් they purchase 3 ships. ships තුනක් ගත්තා. So ship එකක් ලංකාවේ ඉන්න කලින් කවුරු කරන්නේ? ඒතොර ඉලරණ ඇක්ටිවිටි තිබුණේ නැහැ. ඉලරණ ඇක්ටිවිටි තිබුණේ නැහැ. So they challenge that no capital loss to pay. So we claim capital loss. So what? So under which category? That asset is the only asset which generates income. Over the another PP recognized plant. Property plant and equipment. So what is plant? Plant take care of definition. Property plant and equipment. Building, land, building. Here is that. What plant है? Plant එකක් කියන්නේ plant එක තමයි ඒ business එකේ main asset එක contribute කරන income generate. ඒවා plant. Right, so then in the shipping company, ship is the plant. So, one more question before you wind up. So, land is not there. They are not giving capital loss for land. Why? Depreciable asset tag correct. So, land is not a depreciable asset. Land is depreciable anyway. Well, very well. Land is depreciable anyway. Oh, yeah, that's true. So I say, so what we can do, we can amortize in fact. So it could be right. Land over a period of time, no. But there may be situations where just like say Myanmar again, earthquake kuna. And some landslide kuna. Mana me area. And never tell you, but I'm right? You are in Russia. Right. So anyway, land is not here. It's not recognized for. It's not a depreciable asset. Right? It's not a depreciable asset, and therefore no capital loss. Another thing. So this is very similar to what? Depreciation. For the, I mean, there is no word like that, but for the tax point of view, depreciation we recognize as capital loss. Very similar to depreciation. Right. Thank you.